Okay, then. In the last class, as I said, I told you, I showed you how profit statements are prepared under the two approaches, the absorption and the marginal costing. There are differences. In absorption costing, we have to make an adjustment for under or over absorbed overheads. We have to make an adjustment for under or over absorbed overheads because we add fixed production overheads to the cost of inventory units in absorption costing. But in marginal costing, we value inventories only on the basis of variable costs, only on the basis of variable, in fact, variable production costs, as you can see. And to get contribution, we deduct all the variable cost from the sales revenue in marginal costing to get contribution, and all the fixed costs are written off as a period expense. But in absorption costing, we absorb overheads to units of inventory. We absorb, in fact, fixed production overheads to units of inventory using overhead absorption rate, and we also make an adjustment for under or over absorbed overheads to arrive at the gross profit. And in the end, what happens? All non production costs are written off as a period expense in absorption costing to get the net profit. So this is how I can summarize the differences, or you can say this is how I can summarize the profit statements that are prepared under the two approaches, the absorption and the marginal costing. Now I told you different points about, in this way I told you different points that you need to remember about marginal and absorption costing. In today's session, I will look at some more important points, some more key points about the two approaches. Now, first of all, absorption of overheads, absorbed overheads. Okay, now we absorb overheads in absorption costing using overhead absorption rate. This overhead absorption rate is multiplied by the actual production level. This overhead absorption rate is multiplied by the actual production, the number of units actually produced during the period to get absorbed overheads. What happens that if absorbed overheads are more than if actual overheads are more than the absorbed overheads, if you can say, if the actual expenditure, what does actual overheads represent? Actual overheads represent actual expense, actual expenditure. If this actual expense exceeds our estimated, our absorbed overheads, then this is called under absorption, since absorbed overheads are less than the actual. if absorbed overheads are if absorbed overheads are more than the actual, then this is called over absorption. So this is something that I told you, that I have already told you. Now, what happens under the two approaches, the marginal and the absorption costing? We get different profit figures. So sometimes we need to reconcile profits. We need to show how much is the difference in the profits, reported by the two approaches, and we have to prepare a reconciliation of profits like this, as shown on the screen: absorption costing profit and marginal costing profit. And here, between the two, in the middle, you can see increase or decrease in inventory is multiplied by fixed overheads per unit. This fixed overheads per unit actually represents overhead absorption rate. This overhead absorption rate, this OAR, is multiplied by the change in inventory level to get the difference in profits under the two approaches. Over this is actually the overhead absorption rate, and this is multiplied by the change in inventory level. Okay. Now, as this formula suggests, let me explain you in some detail. Now, the difference in profits. So, let's talk in some detail about the difference in profits under absorption and marginal costing. Let's talk about the difference in profits under absorption and marginal costing. Why this difference arises? Number one, because of, let me make it a little bit more better looking. Okay, the difference in profit arises because of the change in inventory level. Number two, this difference arises because of fixed overheads absorbed. And these fixed overheads are absorbed according to overhead absorption rate. So the formula, or you can say how we calculate this difference in profit. This difference is calculated as change in inventory level multiplied by overhead absorption rate. This change in inventory level multiplied by overhead absorption rate. So the difference is calculated, the difference between the profit figures of the two approaches, the marginal and the absorption, is calculated as change in inventory level multiplied by overhead absorption rate, that is OAR. Now, what happens that we are given questions, the CIMA P1 examiner, the CIMA P1 examiner definitely gives questions in the exam that require you to perform calculations based on these formulas and these theorems. Now, let me show you some questions from the CIMA P1 exam kit. Now, this is a question. This is a question from the CIMA P1 Kaplan kit. Okay, now here I will give you some time to read the question, question number 8. I will give you some time to read this question. So here I am giving you 2 minutes time to read this question. I am giving you 2 minutes time to read this question. And when, so I am taking a 2 minutes break here. I am taking a couple of minutes break here. When I will come back, I will solve the question in front of you. I'll solve the question in front of you. So take your time, read this question and read this question calmly, just calmly go through this question, read this question, and when I'll come back, I will solve this question in front of you. Okay, then. Now, this question actually requires you to calculate by how much the absorption costing profit differs from the marginal costing profit, the difference in profits actually. So we are told that the company has budgeted to produce how many 5,000 units of product B. This is the budgeted production. The budget for the December shows that for product B the opening inventory will be 400 units and the closing inventory will be how much? 900 units. The inventory level has increased. The monthly budgeted production cost data for product B for December is as follows. Now, here we are given the cost data, the variable costs per unit, the variable production overheads per unit, and the total fixed production overhead costs. Okay, now, so you need to remember I told you 2 points that the difference in profit arises because of the change in inventory level. Here the inventory level is increasing. By how many? 500 units. By 500 units. When the inventory level increases, remember one more point, that when the inventory level increases, absorption costing gives a higher profit. Okay, let me just wait a minute. Okay, then there are a few more points to remember. When the inventory level increases, I am writing in front of you, when the inventory level increases, that is when the closing inventory, the units in closing inventory are more than the units of opening inventory. This is when the inventory level increases. Then absorption costing Absorption costing gives higher profit, higher profit than marginal costing. Now, when the inventory level decreases, then opposite happens. Then the opposite happens. What happens? Absorption costing gives lower profit than marginal costing. And when there is no change in inventory level, then the profit, when there is no change in inventory level, when in inventory level, then the profit under two approaches remains the same. Then both, when there is no change, then both marginal and absorption both give the same profit figure. So inventory level, speaking of inventory level, when the inventory level increases, absorption costing gives a higher profit, as I have written in front of you. So okay, so in this question, what is happening, what has happened, that the inventory level has increased by how many? 500 units. 500 units increase in inventory level. ठीक है? Okay then. 500 units. This is the increase in the inventory level. Now we have to calculate overhead absorption rate. We have to calculate what? We need to calculate overhead absorption rate. The company has budgeted to produce 5,000 units, and the budgeted fixed production costs are how much? Fixed production overheads are how much? Fixed production overheads are 29,500. 29,500. So overhead absorption rate, how much should be the overhead absorption rate? Overhead absorption rate is equals to 29,500 divided by the budgeted production, that is 5,000. So we will get the answer as, just wait a minute, we will get the answer, just wait a minute, I'm coming in in a moment, I'm coming back in a moment. Okay, so we will get an overhead absorption rate equal to $5.9 per unit. So we will multiply this figure by this 500 units. That's the change in the inventory level. That's the change in the inventory level to get an answer that is equal to 2950. $2950. This is the difference in profit figure. And since the inventory level is increasing, increase in inventory is increasing from 400 to 900, then absorption costing will give a greater profit. So B will be the correct answer. Okay, that. So B will be the correct answer. Now moving forward to question number 9. A company operates a standard absorption costing system, and we are required in this question number 9, we are actually required to calculate over or under absorption of overheads. The budgeted fixed production overheads for the company for the latest year were budgeted fixed production overheads for the company for the latest year were how much? $330,000, and budgeted output was $220,000 at the end of the company's financial year. The total of the fixed production overheads debited to the fixed production overhead control account was $260,000, and the actual output achieved was 200,000 units. Now, since here we are given the budgeted fixed overheads and we are also given the budgeted activity level, we can calculate an overhead absorption rate. How much will be the overhead absorption rate? Overhead absorption rate will be calculated as 330,000 divided by 220,000 units, and it will be like equal to how much? It will be $1.5 per unit. Overhead absorption rate will be $1.5 per unit. Now, so we have calculated overhead absorption rate using the fixed production overhead cost and the budgeted activity level that is given in the question that I have underlined in front of you. 330,000 is the budgeted production overheads, and the budgeted output is 220,000 units. So I have divided 330,000 against 220,000 to get an answer that is equal to $1.5 per unit. Now, so, and we are here, we are given the actual output, the actual production volume. Actual production volume was how much? 200,000 units. So if we divide this overhead absorption rate by the actual output achieved, what we will get? We will get absorbed overheads. We will get absorbed overheads. So absorbed overheads. Now let's calculate absorbed overheads. Absorbed overheads, as I said, the actual production is 200,000 units. We will multiply it by the overhead absorption rate, that is $1.5 per unit, to get an answer that is equal to how much? That is equal to $300,000. Okay, these are our absorbed overheads, $300,000, and this is the actual overheads figure, $260,000. So actual overheads. This is actually the actual overheads figure. So the actual expenditure, actual overheads are less than what we absorbed. This means that this is an over absorption. This is an over absorption, not under absorption. And the amount that we are getting, The difference between the two is how much? Is 40,000. So this 40,000 is the over absorption, over absorbed overheads, $40,000. So A is the correct answer. A is the correct answer. A appears to be the correct answer. Since overheads are over absorbed by $40,000, A is the correct answer to this one. Now, so what we did in this question, we were given some of the information. We were given the actual overheads. We were given the budgeted activity level and the budgeted fixed overhead cost. So first we found out overhead absorption rate. Then we found out absorbed overheads, and then we compared these absorbed overheads with actual overheads to get the answer, that is overhead absorption of $40,000. Now, moving forward, hmm, let's do question number 13. Question number 13. Okay, then let's do question number 13. I think, this is a similar question to what we did in the. This is a similar question to the last one. So I suggest that you take 2 minutes time here. You take 2 minutes time and you just read question number 13. So when I will come back, I will solve this question in front of you. Just take a couple of minutes time and read this question. When I will come back, I will solve this question in front of you. Okay, then before going for the break, I told you to read question number 13. In this question, we are required to find out the budgeted production overheads. So we need to do, normally we calculate OAR, overhead absorption rate, then we calculate absorbed overheads. We compare these absorbed overheads to actual overheads to get over or under absorption. But here, instead of working in this way, we are required to find out budgeted production overheads. We are required to find out budgeted production overheads. So we need to do a kind of a backwards calculation, a reverse calculation in this question. Actual overheads are 481,250. Actual overheads are 481,250. Okay. Absorbed overheads, we can find out the absorbed overheads from by deducting, by subtracting 19,250. That is the amount of under absorption of overheads from this actual figure. Under absorbed overheads 19,250. So we will get absorbed overheads as, we will get absorbed overheads as how much? 462,000. This is the amount of absorbed overheads. And how do we calculate absorbed overheads? We calculate absorbed overheads. How do we calculate absorbed overheads? We calculate absorbed overheads as like this, by multiplying overhead absorption rate by the actual production volume. This is how we calculate absorbed overheads. So absorbed overheads is equals to this, OAR multiply by actual activity level, or you can say actual activity level. This is how we calculate absorbed overheads. We are given the figure. So we have determined absorbed overheads here. Now, what do we need to do? We need to put figures in this formula to get overhead absorption rate. To get overhead absorption rate. So overhead absorption rate will be equal to absorbed overheads divided by actual activity level. This means OAR will be equal to how much? OAR will be equal to 462,000 divided by actual activity level. How much is the actual activity level? The anticipated standard labor hours, while the standard actual hours, how much are the actual hours? Actual hours are 38,500. So overhead absorption rate is how much? Overhead absorption rate is $12 per hour. Is $12 per, is how much? Is $12 per hour. OAR is how much? OAR is $12 per hour. Okay then. Now we have another formula for overhead absorption rate, OAR, that is equal to budgeted overheads Budgeted overheads divided by budgeted activity level. So OAR will be equal to, we have calculated OAR. We have already calculated OAR, that is $12. Now, the budgeted overheads, how much are the budgeted overheads? Mm, we have to, in fact, we have to calculate budgeted overheads. And we are given the budgeted level of activity. That is how much? That is 38,000 hours. 38,000 hours. So budgeted overheads will be how much? Budgeted overheads will be 456,000. 12 multiplied by 38,000, 460, 456,000. 456,000. This is the answer for budgeted overheads that you will get. Budgeted overheads. How we calculated? We just took the overhead absorption rate, that is 12, and we multiplied it by the budgeted activity level, that is 38,000, to get 456,000 as the budgeted overheads. So this is the correct answer. A is the correct answer for this one, for question number 13. Now, moving forward, we have some other questions. WTD Limited, question number 14. This is another question that is very much similar to the questions that we are doing in this class, that we have done till now in this class. Question number 14. Now, in this question, we need to calculate by how much amount the absorption costing profit differs from the marginal costing profit. So you can, again, you can solve this question keeping in mind the points that I told you earlier about the differences, about the difference in profits of marginal and absorption costing. Why the difference arises? The difference arises because of the change in the inventory level and the fixed production overheads. Fixed overheads absorbed in absorption costing. Okay, then. So here we need to calculate by how much amount the profit under absorption costing will differ from the marginal costing. So let's look at the question. The budgeted fixed production overhead for the period are. These are the budgeted fixed production overhead, the budgeted output. We are also given the budgeted output. This means that we can calculate the overhead absorption rate, OAR. Now, there were 800 units at the beginning of the period, but only 500 were left at the end of the period. So the inventory level actually declined from 800 to 300. There was a decrease of 300 units. Just multiply this by the overhead absorption rate. How much will be the overhead absorption rate? The overhead absorption rate will be 500,000 divided by 2000 by the budgeted output for the period is how much? Yes. So the overhead absorption rate will be $250 per unit. $250 per unit. Just just wait a minute. 500 divided by 2. Yes. 250 multiplied. Yes. $250 per unit. This will be the overhead absorption rate. This is the overhead absorption rate we have calculated, multiply this overhead absorption rate by the change in inventory level, that is 300 units, to get an answer that is equal to $75,000. This is the difference in profit of the two approaches, the marginal and the absorption costing approach. Now what will happen? We need to determine whether the whether the profit in absorption costing is higher or lower than the marginal costing. So during the period, what happened? The inventory level decreased. This means that absorption costing will report a lower profit as compared to the marginal costing. So B will be the correct answer. 75,000 lower. Absorption costing will report a profit that is 75,000 lower than the marginal costing profit. Okay then. So this was question number 14. Moving forward. Okay, let's look at question number 15. Again, a very easy question. Overheads will always be over absorbed. Now, when does the over absorption occurs? When does the over absorption occurs? When the absorbed overheads. The first thing that should come into your mind by looking at this statement, when does the over absorption occurs? Over absorption occurs when absorbed overheads are higher than actual overheads. Okay, absorbed overheads are higher than the actual overheads. So look at statement number C. Look at this statement, the third statement, option C. Actual overheads incurred are lower than the amount absorbed. This means that it here it is saying the same thing, but in an opposite way. Instead of saying absorbed overheads are higher than actual overheads, this statement says actual overheads are lower than the absorbed overheads. The meaning of both the statements are same, so C is the correct answer. Over absorption occurs when actual overheads are lower than the absorbed overheads, or when you can say absorbed overheads are higher than the actual overheads. Moving forward. Hmm, okay then. Let's look at this question number 7. This is an interesting one. This is an interesting one. Question number 7. A business reported a marginal costing profit. We are given the marginal costing profit now, and we are given the inventory values for the opening inventory and the closing inventory for the two approaches, marginal and the absorption costing, both the approaches. We are given the inventory values for the opening and the closing inventory under the two approaches, the marginal and the absorption costing. And we are required to find out what would have been the reported profit under absorption costing. So we need to determine, the main thing that we need to determine is that by how much amount, by how much amount the profit differs. The difference, we actually need to find out the difference in profit of the two approaches. Once we know the difference, we can add that difference to the marginal costing figure. To get absorption costing profit. So the main thing that we need to find out in this question is the difference in the marginal costing profit and the absorption costing profit. Now keep in mind two things. The two main points I told you, that the difference in profits, again I am saying, the difference in profit arises because of, number one, change in inventory level, and number 2, fixed overheads absorbed. Overheads absorbed using overhead absorption rate. So the two things that cause change in profit are actually the change in the inventory level, secondly, the overhead absorption rate. These are the two main items that cause differences in profits. Okay, then. Now, here I am giving you some time. I feel like I need to give you some time. So, here I am giving you a couple of minutes time to read this question, as this is a little bit difficult one. Think over it. Think over it. Don't worry if you are not getting this question. I am here to tell you. When I will come back from the break, I will solve this question in front of you. Okay, then welcome back. Before going for the break, I gave you this question, that is question number 7 of the Kaplan revision kit, to read. Now, we are given in this question, we are given the marginal costing profit and we are given the inventory figures under the two approaches. So, and we need to determine, the main thing that we need to find out in this question is the difference in the profits of the two, the marginal and the absorption costing. So let me show you how. As I told you that the difference arises because of the two factors, the change in the inventory level and, okay, then opening inventory, the change in the inventory level, and, okay, marginal costing. Let me make a table in front of you that will help you understand things in a better way. Okay, now opening inventory in marginal costing. How much is the opening inventory in marginal costing? The opening inventory reported in marginal costing given in the question is 16,000. In absorption costing, the opening inventory is 28,000 under absorption costing. The closing inventory, how much is the closing inventory? Closing inventory in marginal costing is 20,800, but in absorption costing, the closing inventory is 36,400. Now we need to determine the differences. Okay, take the difference between the two. 28,000 minus 16,000, that is the 12,000 difference. Again 36,400, and this is 15,600. So the difference in profit, what I did, I actually took the difference in the figures. Opening inventory under the two approaches differs by $12,000, and the closing inventory differs by $15,600. Now, if we take difference, how much will be the difference? The difference in profit is how much? The difference in profit should be 3,600. The difference in profit is how much? The difference in profit is 3,600. This is the difference in profit. How I calculated this? I just took the difference in the inventory figures, and then I took the difference in the difference of the inventory figures. This is the difference in profit, is actually the difference of these two, difference of differences. So 3,600 is the difference in profit. 3,600 is the difference in profit. And how I calculated these figures, I told you that the difference in profit actually arises because of the difference in the inventory levels and the fixed overhead absorbed. Fixed overhead costs are already absorbed in these figures, the absorption costing inventory figures. Fixed overhead costs are already included in these figures. So what we need to do, we just need to take the differences, the difference in the opening inventories, the difference in the closing inventory, and finally the difference between these two figures, the difference of the differences, to get the difference in profit. So 3,600 is the difference in profit. Now the question here arises whether the profit in absorption costing will be higher, or whether the profit in marginal costing will be higher. Under which of these two approaches the profit figure will be higher? As we can see from these figures, that the inventory level is increasing because the closing inventory is higher than the opening inventory. You can see for both marginal costing, the closing and the absorption costing, the closing inventories The closing inventory figure is more than the opening inventory figure. This means that the inventory level has increased during the period. So absorption costing will give a higher profit. Absorption costing will report a higher profit because inventory level has increased. Since the inventory level has increased, since the inventory level has increased, absorption costing will give absorption costing will report a higher profit. Since the inventory level has increased, absorption costing will report a higher profit. Now, what will happen? Absorption costing will report a higher profit since the inventory level has increased. So what we need to do in the question here, in the question we are given the marginal costing profit. Simply we will add 3600 to get the profit in absorption costing. Since the absorption costing will profit will be higher by 3600, that is 48600. So this is the correct answer. 48,600 is the correct answer. That is equal to 45,000. That is given that is the given marginal costing profit plus 3,600. So 48,600 is the profit in absorption costing. 45,000 plus 3,600. This is the absorption costing profit, and this is the answer. So I hope that you like this session. This is a demo class of my full, you can say, an introductory class of my full CIMA P1 course. If you want to join this course, let me know by contacting me via WhatsApp. My name is Muid Ahmed Siddiqui, or you may also contact me via Facebook or any other social media platform like LinkedIn. But mostly I use Facebook and WhatsApp. I do also use Telegram. I do have a Telegram, uh, but not so frequently. So you can contact me, no problem. You can contact me via any social media platform. My name is Muid Ahmed Siddiqui, and this is a demo class. This was actually a demo session of my full CIMA P1 course. If you like to study, if you need any kind of assistance, you can then also contact me. Thank you very much. Thanks for watching. It was Muid Ahmed Siddiqui. Let me know if you need my assistance. Thank you very much, and hope to see you soon.